Welcome back to another episode of Bitfinex Talks. I'm your host, Ricardo Martinez. Today, my guest is Chris Blec. Chris is an adversarial thinker in crypto, and he has a lot of spicy takes on Twitter. He's also the host of Chris Blec Conversations, a new podcast that he recently launched. I think he's up to episode 4, if I'm not mistaken. And he's the author behind the Blec Report, which is a wonderful blog if you're into reading spicy takes about DeFi and Bitcoin and crypto in general. Chris, how are you? Thank you for coming on the show.
Thank you. I've never been better.
Nice. Well, I'm happy to have you here in such a great state of mind. I wanted to kick the conversation off with your spicy takes. Like, you're known for tweeting some things that go against the grain of common DeFi narratives. Which one would you say is your most controversial?
It's been many years now, so it's I don't know. I don't know which is the most, but it's really all rooted in the thinking that that was the reason for Bitcoin being created, which was, how can we create something that defies humanity almost, that makes it so that humans, which we acknowledge are broken creatures, we're all fallible, nobody's perfect, everybody can screw up, everybody's greedy to some extent, everybody's selfish to some extent. How can we create a system that takes that into account and protects against it? So almost everything that I put out there into the world in this regard is from that perspective, whether it's about Bitcoin or DeFi or social issues or whatever it might be, government, it's just about humans being humans, and how can we as humans protect against our own instincts when we're trying to design these systems that ultimately play such a huge role in our lives, like money. So I don't know which one's the spiciest, but they all come from that point of view.
Let's get into your takes on Ethereum Layer 2 scaling layers, because I know that a lot of people in the Ethereum community think they're the greatest thing, but you seem to have a different perspective. Can you kind of expand on that?
Well, any Layer 2, whether it's something on Ethereum or it's Lightning on Bitcoin, they're all trade-offs. They're all trading away decentralization for efficiency and for cost savings, for speed, whatever it might be. Lightning has been transparent about that, about the way it works and the trade-offs that it makes. The L2s on Ethereum are more like, each one is like its own little commercial enterprise. Like, there's a company behind it that's developing it. They've raised tons of capital. They have to eventually provide a return to their investors. They have airdrop tokens, and there's these big token economies. They have treasuries, and it's this whole thing. And they're all funding development on their Layer 2s. So all of these people, these developers who came to Ethereum and had this open source spirit and mentality, and we're building to make the world a better place, now they're getting paid to build on these Layer 2s as well and almost duplicate everything that they were building on the Layer 1. The big problem is that the Layer 2s are all centrally controlled by the companies that develop them. And they're all making promises. Yes, eventually we're going to decentralize this. Eventually. We have a roadmap, whatever. But in the meantime, there are multi-billion-dollar economies on each of these Layer 2s that are totally subject to the control of the company that developed it. Much unlike Ethereum, which is a proof-of-stake system, thousands of validators, much harder to corrupt that than it is a Layer 2 that is literally controlled by a multi-sig key with signers who we don't know who they are. There could potentially be one person who holds like all the signing key. We don't even know. They haven't revealed that, and I'm not even saying they should reveal that for security purposes, but the fact of the matter is we don't know, and people are putting their life savings onto these Layer 2s as if they're just as safe as Ethereum, when in reality they're not, and they're not disclosing these facts to users in the way that they should be they're putting it deep in their docs. You have to dig to try to find the reality of it. Where, as we know, humans are kind of not the most diligent when it comes to this stuff. They need to be slapped in the face with it. That's why regulators exist. None of these guys are like on their homepage saying like these are centralized systems, et cetera, et cetera. So, long story short, they're very centralized. People are trusting them far too much, and they're ultimately gonna be regulated. And we have no idea what they're gonna look like in the future.
Okay, those are all awesome points. Which path do you see as the path forward then, if you see these problems with layer 2s? Do you still think it's a layer 2 for scaling, or do you advocate for on-chain scaling like just in bonds?
I think that a lot of this stuff is going to get adoption, and that's why I take a stand against the obfuscation. I think that what they're doing is likely to work because it was already proven. There was already a case proven on layer 1, with this ecosystem built on top of centralized stable coins, which are a whole other issue, but all this whole economy, this decentralized lending stuff and like all this stuff, there's something there, and the fact that now you can move it to a more centralized system that speeds it up, makes it cheaper and more accessible, makes a lot of sense. If you're looking at it just from like a technology point of view, if you look at these all like startups and it's like Silicon Valley and we're building fintech, it makes sense to do what they're doing. And I do think that it can work, especially if it gets adoption from like banking institutions, which it is. Like JP Morgan is heavily investing in this stuff. And there's a lot of other European banks that are really getting into it. And even central banks are starting out to look at this and be like, this could be a scalable system we can use, layer 2s and even layer 3s and whatnot. So I think it can work. The problem is it'll never be decentralized. It'll never have the properties that Bitcoin or even Ethereum have at the layer 1, so we're building a system that takes all of the it sort of takes certain parts from Bitcoin and it leaves out the most important parts. It takes the permissionlessness and it takes to a certain extent the on-chain transparency, but it leaves behind the censorship resistance. It leaves behind the game mechanics that make Bitcoin work. All the most important stuff. And that's a recipe for something really bad. If you take out the best parts of Bitcoin and just leave behind these other things, you end up with something that's controllable, regulatable at its core, at its logic. Like it's as if like the government can change Bitcoin's protocol. Like that's what we're dealing with these layer 2s and with DeFi. And ultimately, it's something that can be used to become the rails for a central bank digital currency, which is, I think, the ultimate goal here.
What would you say to people that argue that crypto was always going to be like watered down in this fashion in order to succeed? Like we see some of the most successful projects in crypto are like these stable coins that are regulatory compliant and use AML KYC for their users and stuff like that. Do you think it was inevitable?
Looking back now, well, first of all, what is success? Like, I think Bitcoin has been successful, in achieving what it's achieved as a decentralized system. I think it's been successful in warding off attacks, on its protocol, on its politics, on, its philosophy. That to me is success. Success is that for this ecosystem. If we're talking about like financial success, if we're talking about adoption, if we're talking about like crypto tokens in everybody's wallet at all costs, then yeah, like that's the route. The route that they're taking is the route to get there. But that is not the route of freedom. That's not the route of decentralization. That's giving up the most core elements of Bitcoin. It's carving out all the best parts of Bitcoin and just moving on with this other stuff, which is controllable. And so the success of this stuff that they're calling crypto ultimately is a failure, I think, of us as people, because it shows that we can take the best technology that we can possibly think of, like Bitcoin. We can pluck out all the best parts because we're greedy and we want this adoption, and we're going to, push it forward in this mutated state, which ultimately is going to create our own financial prison, but it's going to make all these companies rich in the meantime, and all these people who are trading and stuff like that. And it's to a certain extent, it's almost like a failure of capitalism in that way, I think, because it's all driven by venture capital. It's all driven by startups that, there's startups out there, like, we had the whole situation with vaccines and stuff the last few years, and, half the people line up to get jabbed, and the other half of people are like, stay away from me with your nonsense. There's literally startups out there working on solving the problem of the 50% of the people who don't want to get jabs. It's like they're trying to literally solve, like, how do we convince them? How do we incentivize them? How do we force them? There's startups raising capital to do that. So there's a company out there that's going to be able to raise money to do anything that they think that somebody's going to want to pay for. They're going to sell these services to governments and stuff like that. And I think that's what we're seeing with crypto to a certain extent. I think a lot of the stuff that's being developed is the long-term play is, we can sell this to governments. We can sell this to central banks. We can create these layer 2 models that a central bank in Europe could pay to adopt and create their own layer 2 and create their own system, and we can help them scale it. So these are companies that want to generate a return. They've raised a lot of capital, they made a lot of promises, and they have a lot of money that they think they can make.
Yeah, I could totally see that playing out that way. What do you think about these like privacy DeFi projects? There's DarkFi is one. I think Particle and Basic Swap Dex is another. Do you see a future for like DeFi, but built with a lot more encryption and like privacy and confidential transactions like into the smart contracts, so that they're not transparent, as like a path forward to kind of avoid this centralization vector that you're discussing?
I don't know a lot about those projects in particular, but with regard to privacy, specifically in DeFi on Ethereum, like this ecosystem that's being built, and which, by the way, is now so political that the VCs and the companies involved are paying lobbyists. They're meeting with Congress people and regulators, and they're trying to play a role in the creation of law and the creation of regulations. And those regulations won't just apply to them; it'll apply to everybody, right? And they are anti-privacy. Like, we know if you're going to be a DeFi or any kind of financial company, and you're going to go to the government and say, I want to work with you to create, regulation, to create law that's going to allow us to do what we want to do. The first thing the government's going to say is, okay, well, number one, we need information on every single person that's using your product. Like, the government is never going to allow a privacy tech smart contract or project or company to keep information private from the government. Maybe you can keep it private from other users, but you'll never be allowed to keep it private from the government. So that's going to be a problem. And the main reason that's going to be a problem for these projects is because with DeFi, you need liquidity. You need whales. You need lots of money flowing through in order for this stuff to work. And all of the whales, all the big money, all the institutions that are currently making DeFi work are subject to these regulations. They're not going to want to play in pirate land with, with all the geeks over here in like BitTorrent world, right? They're going to want to play in the regulated big pond with billions and billions or trillions even of dollars worth of liquidity. They're not going to want to, like, A16Z doesn't want to be over here in DarkFi land hiding out, undercover with, they want to be over here. They want to be seen. They want everybody to know. They don't want to go to jail too. That's the other thing. So I admire what a lot of these guys are trying to do. But if they're hoping to fit into this world of DeFi, I think that they're probably going to end up failing. There's other privacy tech that I think is crucial, like Monero and other projects that are actually building layer 1 solutions that are usable as currency, potentially, atomic swappable with Bitcoin. And like, there's a lot of stuff going on there that I think is really important, but I'm not so sure about these other ones that have high hopes for, especially after what we saw with like Tornado Cash and that stuff. If they have high hopes for fitting into DeFi, I think that it's probably not going to happen long term.
Another spicy take that you have is talking about Coinbase's blockchain. And I know there's a lot of critics of Coinbase's blockchain, but what are your thoughts on Base?
Well, Base has all the same properties of layer 2s that I mentioned before. The one thing it has that the other layer 2s like Arbitrum and Optimism and those don't have is they're already an exchange. Coinbase is an exchange. It's a regulated exchange, right? Yeah. With the SEC's eyeballs on it, with Congress's eyeballs on it, with everybody's eyeballs on it. They developed Base. They control Base in the way that I described before. They run the only server that's processing transactions. They run the validators. They run they have the multi-sig that can be used to completely overhaul the way it works, the way the smart contracts work, the way the bridges work. They have custody of the bridge funds. So my main concern about what they're doing is, I mean, technically it's very similar to the layer 2s, but politically there's a lot of problems that can happen pretty quickly. As far as should Coinbase be, a government looking at it saying, should Coinbase be KYCing everybody who bridges into Base? How can Coinbase run this layer 2 where somebody can launch a scam coin called Bald, right? And like billions of dollars can flow in and out of it from who knows what country. We have no idea what countries are, it could be Russia, it could be North Korea, it could be, whoever. We don't know. They don't know either. And there's trading this, for all we know, Bald could have been launched in Russia. Somebody in Russia could have made millions of dollars, and then they're taking it out of Americans and Europeans. Like, we don't know what's going on. Now, I'm not saying that I want to see it get regulated. I'm saying that a government could look at it and say, Coinbase, obviously, you have to change the way this is happening here. You have to KYC everybody. You have to, you can't let anybody bridge in or out without knowing who they are. You have to control, you have to whitelist smart contracts that are going to be able to work. But Coinbase isn't talking about any of this. They're not talking about any of these risks. They're playing a game of chicken with the government, and they're using like unsuspecting users as kind of like a human shield. I think that they think that if they can get enough adoption of Base, that they can make a case when the government ultimately comes to them and says, what is this? They'll say, hey, look, we've already got like $5 billion here. You're going to hurt these users if you try to shut us down. Regardless of what happens at that point, I mean, either they'll be forced to comply, with regulations, with laws, or they'll be allowed to run a layer 2 that they maintain full control over. And I think the one thing that a lot of people forget is something isn't decentralized just because the person running it decides not to use their power over it, right? But that's what's happening with Base. Coinbase is just choosing right now to leave it open, and make it so anybody can bridge in or out. They're making that decision. So it's not decentralized in that regard. It's just they're making a strategic choice to leave it open. They can close it as fast as they can open it. And I just, my biggest concern is they're not being transparent about this. And I think that it's a corporate negotiation with government that could end up leaving users hurt.
Yeah, I was going to say, I think that's like a major incentive for them to leave it open right now and have that as like a poker chip for negotiation with regulators,
right?
Like later on down the line. Okay, so I think Coinbase's Base blockchain, like they're using it to launch other projects and stuff like that. Do you see like these other projects being like fully regulated, or do you think that they're going to allow them to launch like in an open fashion? Like right now they're kind of going to to war with the SEC, so to speak, legally, as far as like regulations over their trading and what tokens they can offer and stuff like that on the platform. So how do you see like Base being a launch pad like playing out?
Well, they're definitely letting people deploy projects in a permissionless way right now, right? So the question is, what's that going to look like long term? Now, what they've come out and said is that they plan to work towards decentralization of the layer 2, but it's only their idea of decentralization. None of these things are ever going to be Bitcoin. None of these things are ever going to be Ethereum. They're always going to have, for instance, multi-sigs that are as little as like, it could be a 2 of 3. I mean, I don't know what it is in their case. I know with some of the others, it's like a 4 of 9, a 5 of 9 multi-sig, where you have 9 people who could, 4 or 5 of them could come together and make any kinds of changes to the logic of how the layer 2 works, how the bridging contracts works, the staking contract works. If we're in 5 years, if the government doesn't do what I'm predicting, if it builds up, if there's $10 billion, if there's open protocols and it's permissionless on Base and everything looks wonderful, there's still going to be Coinbase controlling it. There's still going to be that level of control. So it's still like, whereas with Bitcoin, you have thousands and thousands of node operators and miners and all this stuff. With this layer 2, you'll have like 4 people who can control it, who can change the rules, who can do anything. So that's really their idea of decentralization, is having those 4 or 9 people just not work at Coinbase. Like that's really what they came out and said a couple of weeks ago. So, their idea is like, if we have that multi-sig and we just have it be members of the community, or we have it be who knows who, maybe even members of government, then it's decentralized. But that's moving the goalposts, and I think that a lot of people treat decentralized and centralized as binaries, as like these absolutes, but there is no absolute on either side of that. It's all this spectrum, and everything looking forward for something like Base is, to me, it's much closer to a bank than it is to Bitcoin. And I think that long term, this could potentially be a model for JP Morgan and Citibank and Deutsche Bank and all those other banks to adopt for the next wave of banking.
So do you see any potential for like DeFi to manifest itself like either on Ethereum or Bitcoin or some other Web3 chain in a way that's like decentralized, like crypto users and crypto nerds understand it, where like really it doesn't matter like what regulators say, these smart contracts are going to operate anyways, and like that level of decentralization that could stand up to like a state level actor?
Yeah, I mean, that exists on Ethereum to the extent that you believe Ethereum can't be corrupted, like as the proof of stake mechanism, which is questionable and debatable. But on Ethereum blockchain, you have projects. A notable one is called Liquidity, which is a stable coin. You can use ETH as collateral and mint the stable coin. It was launched in an immutable fashion. You can't shut it down. As long as Ethereum exists, it exists. You can't modify it. Nobody can come in, put a gun to the developers' heads and say, shut this down or change it, because they can't. They don't have the ability. And you can do that with an Ethereum smart contract. Any of these layer 2s, any of these complex lending protocols could have been launched in that way. But the developers chose to retain control with the multi-sigs, mostly because they don't have confidence. The stuff is so experimental that they want to be able to fix things, as fix bugs, and make sure people
update the contract.
Right. So, but this allows them to create these super complex. It's almost like this catch-22 where we can have the control, so we can build more complex things and we can build sexier things and give higher interest rates and all this stuff. The stuff that is being launched immutably, like Liquidity and even like Uniswap version 1 through 4 4 is questionable because there's a lot of flexibility, but Uniswap is immutably launched, so you can't shut down previous versions of Uniswap. The issue is nobody wants to launch a DeFi project like that unless it's simple and contained enough where they feel super confident that it's not going to bug out, where it's not going to be hackable, et cetera. And plus, you have to have a very, very big set of balls as a developer to do that. I mean, you think about it, like you're sitting there working on this code for a year, and then finally you get to the point where, okay, it's time to hit the deploy button. You can never turn back on it. You know that there's going to be millions, hundreds of millions, billions of dollars at stake based on this code. It's not an easy thing for a developer to do, and most developers just don't have the balls to do it. So that's why you see most of these projects, from developers of questionable skill sets, they keep that control. So I think that it exists, but it's not as sexy, it's not as VC invested, it's not as heavily advertised as the stuff that's multi-sig controlled.
Okay, cool. Well, thanks for that answer. We're running out of time. I wanted to let the audience know how they could follow you, where they can find your work. Would you like to share that information with us?
Okay. At Chris Blec on Twitter, and Chris Blec Conversations in your podcast app, and Blec.report. And Blec is BLEC.
Awesome. Well, thank you so much for coming on the show, Chris. It was a pleasure talking about DeFi with you.
My pleasure. Thank you too.